Toronto home sales rose in April. That's according to the Toronto Regional Real Estate Board. This is the biggest monthly gain in 9 months for the city. So here to discuss this and more is Lori Pinkowski, Senior Portfolio Manager at CG Wealth Management and founder of Pinkowski Wealth Management. It's great to have you join us. Good afternoon.
Thanks for having me.
Let's start with those home sales numbers that we're seeing, prices in both Vancouver and Toronto. What are your biggest takeaways? Was there anything that was kind of surprising to you that you didn't expect?
Yeah, when we're looking at Canada's two largest markets, we're seeing, as you mentioned, sales are up 7% in Toronto, which is obviously welcome news after we've seen slow sales for some time. When we're looking at home prices, though, they're still off over 20% since the peak back in 2022. And when we're looking at Vancouver's real estate market, we're seeing that home sales have decreased still 2.5%. So it's a bit, it varies between obviously the two major markets in Canada. However, still, as I mentioned, off the peak, we're seeing home prices down 20+% even. And when you look at the stock market since that period, markets are up like 60% in the same time frame. So I was always worried that a lot of Canadians own a lot of real estate. They're real estate heavy, especially here in Vancouver. And so that's when you look back and you go, okay, well, it's always wise to diversify, whether it's real estate and obviously into markets. And so my opinion is this trend is going to continue. You have a lot of built up inventory. It's going to take some time for that to be bought up in order for prices to move higher. So obviously you want a roof over your head. That makes sense. But real estate is an investment, in my opinion, hasn't, and it looks like it hasn't been the best place to be. So good news out of Toronto. Vancouver is still a little sluggish for sure.
Yeah, and I'm not sure what the sentiment is in Vancouver on this front, but new listings dropped more than 9% for Toronto. So is that the same in Vancouver? And what does that tell you about, you were talking about how the markets are kind of reflecting the real estate situation right now. What does that tell you about people's confidence, I guess, moving forward?
Yeah, when we're looking at listings, I mean, we're still way above the 10-year average, even seasonally adjusted. So I think that, like I said, with listings in Toronto, they're seeing a bit of possibly a tighter market going into spring, which is better. But in terms of here, we still have a lot of listings. And like I said, that needs to be bought up in order to see home prices increase. So, so I don't think there's a turnaround in the real estate market at any point in the near future, especially in the Vancouver market. But it's, like I said, good news in Toronto. We want to see things turn around, but we need lower rates for that, in my opinion. And we haven't seen lower rates. The Bank of Canada is even a little strong on possibly increasing rates. And so we'll have to see where that goes. But I don't think people get excited to go out and start buying a bunch of real estate if we have mortgage rates between 4 and 5% right now. So if rates do come down at some point later this year or even into next year, that would be positive. But like I said, I don't see that writing on the wall at this point, especially with elevated oil prices. So we're obviously watching that news daily and monthly as the data comes out. I report on it quite a bit on the radio here as I have a show. But when we're looking at the actual data right now, it's not great, but getting better in Toronto.
For sure. Okay, so let's move on then. We'll talk a little bit more broadly about markets to start, because it seems as though, markets are rallying back today. Price of oil is down. What you're seeing reflected in the markets also, is that more because of tensions in the Middle East, or is that because of a stronger earnings season? Where do you think, or is it both? What do you think is driving this?
Definitely both. Obviously, markets have been somewhat volatile over the last 11 weeks just because of the situation with Iran and the U.S. What we saw yesterday and over the weekend is tensions were rising again. So you saw markets off a little yesterday. But then the U.S. came back today and said basically they don't want to escalate. They want to de-escalate. Iran saying there's progress in some of the talks that they're having. But we're only seeing 4% of the activity in the Strait of Hormuz. So it's every day you're getting new news. And so it's important to obviously closely follow that. But what the markets are telling us is they're looking forward. And markets can even be looking 12 months forward. So what the market is focused on right now, in my opinion, is on earnings. We've had a really good earnings season thus far. And just going back to the Iran situation, you see the price of oil. It can move very quickly, higher or lower. So if there is some sort of resolution, the market is obviously pricing in lower oil prices, which is better for the economy. And we haven't seen these elevated oil prices really trickle into core inflation yet. We saw that in headline, but it hasn't trickled really into the economy yet. So if there's some sort of resolution coming quickly, that's obviously going to be even more beneficial for markets. And we're basically at all-time highs right now. A lot of that has to do with the ceasefire that was announced a few weeks ago, but also earnings season has been fantastic. I mean, we've got 2/3 of the S&P have reported, and 84% have beat expectations. And so I know that we're looking at WTI oil here. And what we've seen is, of course, it is elevated, but it has come away from the peak where it was.
And I do
so
want to. Sorry to interrupt. I do want to ask you about a couple of companies, as you say, like we're seeing many companies beat expectations here. There's a few you wanted to go through and some I wanted to ask you about. Thomson Reuters also beating estimates in first quarter revenue. Was there any key takeaways from Thomson Reuters that you wanted to mention?
I think just with the increased market activity, obviously that's a positive there. When we're seeing various companies reporting, you're looking at, this is not a company we own either, but you can see that earnings expectations going forward or guidance, if it's weak, it's obviously being hit. We also were talking about PayPal is another one that's off quite a bit today, off 10%, for example. There's a lot of competition in that space, and even though earnings may be looking okay on the surface, when you're looking at guidance, it's not. And PayPal is one that's just been hit hard, and I guess the name for it is PayPal at this point. Again, a company we don't own. As active managers, we recognized a long time ago that this company consistently has earnings issues and is not performing. So that's a company we also don't own, but it's being hit today. And then you have Shopify as well, off. I think it's 14% right now. So yeah, you want to make sure you're in the right companies at the right time and avoid some of those companies that are having bad earnings reports at this point, because there's so many good companies to choose from, whether you're looking at financials, industrials, materials, consumer discretionary. You just need to be selective in what you're owning. So you don't want to just own the market. You want to be selective in the sectors that you're owning and pick the strongest companies in those sectors.
And speaking of strong companies, Cameco is down almost 3% at the moment, but it had a pretty strong earnings report. It was up this morning. What do you make of what you're seeing coming out of Cameco?
Yeah, Cameco is a stock that we do own. We want exposure to that company, and looking at it, we feel there's a lot of strength going forward, and they're going to have increased revenue growth. When we're looking at kind of AI and the electrification of that, it's important to have other energy plays out there, and so that's why we have exposure to Cameco at this time. And so we've held it for some time, and it's been very profitable for our portfolios for our clients.
Okay, we're going to have to leave it there. We're out of time. Lori Pinkowski, Senior Portfolio Manager at CG Wealth Management and founder of Pinkowski Wealth Management. Great to have you on. Thanks so much for joining us.
Thanks so much.